afternoon and happy Friday, everyone. Welcome to Stock Market Today. Alyssa Corman, Ed Carson here with a breakdown for the session's action and a look at this week and even how this month is shaping up so far. Ed, we're going to be taking a look at a lot of different charts and some individual stocks that are providing good examples of the kind of temperature that we're seeing out there this summer. Not so hot did the week end up being.
No, it did not end up being. It's been a cruel summer, especially this week. We're going to take a look at Upwork, which had a pretty cataclysmic drop on Wednesday. Callon Petroleum and even Nvidia, maybe the big rally winner, is wilting a little bit.
Well, maybe some tells there. First, a look at the NASDAQ here, down 0.8% for the day. Also, the S&P 500 as well. The Dow down about 0.9%. And looking here at the NASDAQ composite on Thinkorswim from TD Ameritrade, we have our candlestick charts here. You can see the NASDAQ coming down to its 21-day line. The last test of the 21-day line, very brief and successful, but we are quickly back and testing this level once again, Ed.
Yeah, closing a little bit below it. We didn't undercut that July 8th low where we bounced off. Basically, the market, and we'll look at some of these charts on the growth and sector stocks where things have been weakening, certainly this week and all month, and maybe even longer, depending on what we look at. But the NASDAQ is no longer covering that up. I mean, Apple and some of these big caps really did for a while, but Apple came off a little bit, Amazon came off, and some other big cap names. And so now the weakness that was already there, it's expanding and getting so big that you can't cover it up. You can't brush it underneath the carpet anymore. It's getting more obvious, and it's just a really difficult market to be investing in.
Now, of course, we can't predict what's going to happen, but if we rewind to the beginning of the week, and even last week, we were saying that really that one-day pullback was that enough that just got us right back in sort of extended territory once again, especially QQQ, the NASDAQ 100, even more extended when you're comparing where we're trading versus the 50-day line. So not all too surprising from that standpoint to see us pull in a little bit here.
Yeah, and if only the rest of the market looked like the major indexes, it wouldn't be so concerning. I mean, it wouldn't be great to be coming back down like this, but there are other weaknesses beyond it that makes it even more troubling. But yeah, by the indexes coming down like that wasn't too surprising given how high they were, as you say, especially the Qs.
And you make a really great point, Ed, because as important as it is to analyze the technical action for the major indexes, we also always like to say, how are the stocks acting that you own? How are the stocks acting that you want to own? And we're going to be providing some additional perspective on that as well here. But I'm going to go on over to a weekly chart for the NASDAQ just before we move on to a couple of the other major indexes and pull it on over here. So our first big red bar in quite a while, Ed.
Yeah, I mean, basically finishing at week's lows. The last couple of months, even, it's been quite a while since we closed in the sort of the low end of the range, because even some of the down weeks had decent finishes along the way. This one was not. Now, again, not so bad when you look at it during that trend. But yeah, this was a little bit different. This was a bit of a character change, especially with everything else going on.
Yeah, so let's go ahead and shift our attention on over to MarketSmith. So let me go ahead and share that. So here's a look at the S&P 500 coming down a couple times, testing the 10-day line, but today closing below that and now coming close to its 21-day for the first time in a little while.
Yeah, so that'll be interesting to see how the NASDAQ and S&P do, with the 21-day in the coming week. But yeah, this one has been weighted to big techs, but big techs no longer up. Energy, financials, a lot of things are coming down.
Okay, and check in on the Dow as well here. So downside reversal today, coming down below the 10-day line, also close to the 21-day line at this point, and less than 1% above the 50-day.
Yeah, and that one's really trading tight. I mean, it wouldn't take much for this to be a record high or go below the 50-day line, and that's just sort of how it's trading. So, but it's doing all right.
But small caps have been an area of concern this week and last week as well, seeing further deterioration, down 1.2% for the day, and for the week down about 5%. So coming in on these lower levels of this whole consolidation area. But give us your take on what we're seeing with Russell. Is it really just a meme stock like ANC weighing on the Russell, or there's got to be more to it?
Oh yeah, I mean that might have had an impact earlier, and actually AMC I think improved the last couple of days. This is the financials maybe, and energy stocks. Energy stocks have been weak. Those are a lot of those, and really frankly, once you get outside the big mega cap techs, there a lot of things were struggling. And you can look at that relative strength line really weakened this month, but you could argue in everything in life, but it's been weakening for several months. So that's been a concern. I mean, there was a brief period where it was doing very well. And that was really, in that run in late 2020 and into 2021 for a while, but it's like now that's deteriorating. So that's not a great sign. I think if we look at the advanced decline line for, say, the NASDAQ, that also shows that kind of issue where the breadth is, let's see here, what is it again?
Oh, it's the periodicity that it's throwing it off. It's giving me an error. So I need to go to the daily.
Daily,
Didn't know
okay,
that.
I'm sorry. I didn't know that either. Yeah, of course, but it's a daily.
Makes sense. But here we go. And in MarketSmith, this is GMIAB to get to that NASDAQ advanced decline line. Go ahead.
And I wouldn't be surprised that it hasn't updated today. I'm not sure, but it's like it may not have updated today yet, so we'll see. But that's come down really sharply in the last, since late June. And really, it hadn't gone up that much. It hadn't been leading, it hadn't been powering higher, given that the major indexes did for a while, and then that stalled out, even though the major indexes kept climbing. So with that
bit of a warning sign there.
Yeah, warning sign there. When you look at that, you look at the Russell, and then it really started to really cascade into the leading stocks, but we saw it in the sectors too.
Well, speaking of, let's go ahead and take a look at some of those sectors, starting off with tech and software by looking at the IGV ETF. So here's a monthly look. Down a little bit, but what's your take on what we're seeing with IGV?
IGV is doing the best. I will be honest about these sectors we're going to look at, I think. And there's Microsoft is in it, doesn't hurt there. And a lot of them did have good runs even into early July. A lot of them are stalling out. So it's a little troublesome. We'll see how they do. So this week, this month, this week they've been down a little bit, and this month sort of leveled off. But that is not too troubling. It's only troubling when you compare it to everything else. In addition.
So software holding up close to highs there, and SMH, down almost 6% for the month.
Yeah, and I think it's even worse. This one, okay, first show, like it's been doing well. It rebounded well in May and June, but look at it daily, because this hit an all-time high on Wednesday. So it came right down. That was, and Nvidia started selling off hard, and we're going to take a look at that. But ASML hit a record high, reverse lower, and ASML has earnings next week. So we saw a lot of chip stocks come down to go from a record high, fall like 6-7%, or maybe 8% from there. I don't know exactly how much from that high through the 50-day line. That was not a good sign. Always want to see the chips doing well in a rally, and that really, I think, weighed on the NASDAQ quite a bit, all that selling.
And ARKK. So a look at how the more highly valued growth stocks are looking, and ARKK giving back a lot of its gains from its May lows in a pretty speedy fashion.
Yeah, and this was doing really well, and just like this is July, where if you can basically right at the end of July, end of June, it peaked and it came right back down. You say 11% so far this month. And there's just a lot of stocks like this, a lot that it owns, or stocks like this, the highly valued growth stocks that sold off hard in, from like February or March and down to May. Then they rebounded, and most of them are running into trouble, whether it's Palantir or Neo or, all sorts of things out there. They're coming down, and that's just an issue.
XME, which is tracking the metals and mining, undercutting the low of the base. Ed wincing there, down almost 4% for the day. And we'll go ahead and take a look at the monthly performance so far this month, down 5% already for the month. And this was a group that we were really seeing come into focus as February. You were saying how a lot of growth stock and technology, it was very apparent that those were moving out of favor. Our attention then shifted to a lot of these metals and mining stocks.
Yeah, and it looked like, maybe at the beginning of July that they were sort of setting up, maybe sort of trying to base up, depending which one. Some look better than others in the metals and mining group. But then this week, you can just see how this week it just sort of fell apart again, and now we're at the lows. So a bad June is followed by, a bad July now so far. And so that's in real trouble.
Okay, and finally XLE, but there's a reason why we're looking at all of these, and so further deterioration here as well, down 2.8% for the day, and for the month so far down almost 10%. So I think it probably will show up in the industry group rankings. We'll see though. But oil and gas has been at the top of the rankings for industry groups for so long now. Are they going to come off of those top groups at this point with this damage?
Yeah, I guess it helps that a lot of groups are coming off a lot, but yeah, this is pretty big damage. They had huge runs, and maybe they'll do something again, but a lot of them are breaking key levels. And what I just don't know why I show these sectors is because the indexes just aren't showing how much weakness there is in this market. And so you really want to see that. So it's like, well, why are my stocks down, or why this? It's like, well, you can see beyond a handful of stocks, there is a lot of trouble that's been developing in this market from a lot of different perspectives.
So even if you're buying the leaders in a particular industry group, it seems like it's helpful to look at these thematic or sector ETFs to kind of gauge how the overall group is doing. If you're starting to see some weakness, even if your stock is holding up relatively well, maybe that would be a sign to start peeling off some of your position if you're starting to see some sell signals there.
Yeah, that's always a good thing, because sometimes, those leaders are holding up, but if the pressure continues, then they'll probably come down too. It's really hard for a stock to resist the market and their group. It's going to come under pressure in those situations.
Okay, well, speaking of coming under pressure, Upwork, UPWK, terrible breakout failure, which is a stock that we had high hopes for. There was a lot to like, a strong run up from lows in May, an aggressive entry or two even here. It's got the sponsorship, it's got the strong industry group, but boy, did this fall apart quickly, Ed.
Yeah, I mean, it had a nice breakout Tuesday. Yeah, it backed off a little bit, but it was still above that little line you're showing. So it was still sort of actionable from that. Then, wow. I mean, there was just really amazing. Not only did it go complete failure of that breakout, but it wiped out the gains from that early entry just below 52. So, there just wasn't anything to be done. One reason you can't freeze in this kind of situation. You have to get out. But it's also, this was just so much more. The magnitude of this sell-off was bad, but there's plenty of quality stocks that had reversals that were, came back to their buy points or below their buy points. So this was way more dramatic, but it was emblematic in another way of how a lot of leading stocks did this week.
And you talked about not freezing. You have to follow your sell rules. You cannot let losses get out of hand with something like this. So seeing how it plunged below the 10-day, then the 21-day, and coming down to the 50-day, you don't want to, this is not a situation where you want to try to wait for the end of the week for a bounce at the 50-day.
That's right. We talk about flexibility and nuance, but there's also these sort of like what I call dumb rules. It's like you don't have to think about it. It's like if it goes 7 to 8% below where you buy it, just sell it. I mean, yes, sometimes it'll bounce right back and you go, oh, I'm so glad I didn't sell it. But it's things like this. You don't want to, if not selling this is where the problems come in, because it didn't bounce back. If it did bounce right back, it would not look right.
And you talked about the weakness in energy. So Callon Petroleum doesn't even fit on here on a daily chart because it saw such a nice move higher before this week, really crumbling though, down 24% just this week. A major sell signal has been triggered.
Yeah, a couple of them. One, it round tripped a 43% gain from that, buy point. I mean, you can always say, oh, there's a different entry, but whatever it was an enormous gain up to the highs and then has just come right back down. There's no specific note, like oil is off its highs, but oil, energy stocks ran up more than that and came down, but it came decisively through its 10-week line. It just was really ugly action. Even if you bought really far down, this was something where you probably wanted to get out by the end of the week because it was such a decisive loss here. It looks like it's going to take some time to repair, and we don't know if the selling is done. I mean, it could continue to fall. Just really ugly, and there was plenty of company among energy stocks this week.
Yes, thank you for the review of those sell signals, Ed. And let's also chat about Nvidia, which we've marveled at the great move that it made, kicking off ahead of its earnings report on the stock split news and continuing higher after its last earnings, running up so smoothly, which you can see on this daily chart, finding support at its 10-day line along the way until recently. And it seems like there is a character change, at least in the short term, happening with Nvidia that warrants peeling some off here.
Look, and like selling a winning stock is always, beyond a round trip and stuff, it's an art as well as maybe perhaps more than a science. So it depends on where you bought it. But if you bought it somewhere in that early entry, the official buy point, especially the official buy point, you might be thinking, well, when it went through the 21-day line, that down yesterday, that would have been time to maybe peel off some. Again, not everybody's going to do that, and you can understand it depends on your level of conviction, how big of a holding this was. But now it's like it's going it's sharply below there. Really, it was a really outside week, heavy volume, and you saw that with the chip sectors, given the leading stocks. And everything seems to be coming down. It just seems like you want to be coming off now. The 10-week line, 50-day line, those could be seen as maybe probably, especially for recent buyers, say around May or early June, breaking below that decisively would seem to be a spot where you'd want to be getting out entirely to make sure you have some gains. If you bought it, if you've been holding it for a long time, you can choose maybe not to sell all of it, but it is getting to that level. That you may want to be taking some profits even there.
All right. Well, let's talk about the game plan for the week ahead. And also, I think a review of what investors should have been doing this week. And it seems like it was a week more for selling than for buying.
Yeah, I don't think that buying worked out very often. I'm sure you can find some buys. There's stocks that went up. But it definitely was a time to be defensive, and it's time to still be defensive. A lot of stocks may have triggered sell signals, just an absolute given. And stocks that were from small gains to losses, do you cut bait on them or at least lighten the load? And, even the stocks that were holding up, we saw stocks like that were doing well and then they sell off. So if you've got some that are really close to highs, you might still want to sell into strength. Again, that's again more the art than science. You never know, but are you just waiting? If you wait for that stock to sell off, if you sell a portion, then you might feel comfortable letting that stock fall further. Like if you sold Nvidia closer to the top, now you can say, I'm going to let it ride to the 50-day line and see if it can find support there, rather than watching all of your position come down. There's different ways of doing it. Everybody has their own investing strategy, but those are things that they could be doing.
Yes. And if you're watching IBD Live every day or reading articles over at investors.com, we are breaking down market conditions in real time. And so we were noting our caution with the Qs getting a little extended. On Wednesday, our expert guests, Mark Minervini and David Ryan, saying how they were going more and more into cash at that point. So, with a lot of the damage this week, seemingly occurring on Thursday and Friday. Maybe data gave our audience a little bit of an edge from that perspective. I think the lesson though is to be prepared for any scenario. You never want to get comfortable and complacent with seeing steady gains. You have to be ready to act when the time comes to start selling.
Yeah, and this week was a perfect lesson, and hopefully we won't get the same kind of lessons next week, but we have to be prepared for it and be ready to go more fully into cash in the coming week.
If that's what's warranted. All right, Ed, thank you so much for that analysis, and thank you all for tuning in. We'll be back with more Monday morning on IBD Live, so we hope you join us, investors.com/IBD Live. Have a great weekend, everyone.